of October. Some cracks started to appear in the markets last week. I've been saying for some months that we are due for a major peak. Whether it's in or not will be the main subject of this video, in fact. But I thought it'd be interesting to look at the currencies first quickly. This is on a very long-term basis. This is the chart of the silver content of the Roman denarius. So back in 64, 68 AD, i.e. 2000, almost 2,000 years ago, the silver content was 100%. Over a 200-year period, it went down to about 0.0, say 1%. So it was devalued by 99%, purely by taking out the silver content. And that, of course, was a time when the Roman Empire just disappeared, basically. So the devaluation of the currency was one of the causes, not the only cause, but one of the causes that the Roman Empire ceased to exist. I mean, there were many other causes. I mean, just weaponry, I guess, got more advanced with the enemies of Rome. The numbers started to grow. I guess sentiment got very negative towards if you weren't actually part of the empire, to the empire, and many other things. Anyway, and I want to show a chart of the US dollar. This is another fairly long-term chart, so short-term traders shouldn't expect to get any trades out of this. Quite interesting. Now, the Fed came along in 1914. The dollar, this chart dates from 1819, so 200 years ago. And you see that actually before the Fed got in, the dollar was a fairly stable animal. It went sideways for 30 years. It blipped up for some reason. Maybe gold went up. I think it was gold-based back then. And it went sideways for most of the next 70 years, other than this blip here, which I guess is a civil war. That's just a guess. So then the Fed came along. I mean, the Fed was, I think its stated objective was to stabilize the currency, maybe. Instead of which, of course, it's gone from 180 at the time of the creation of the Fed until down to below 1. So that is a more impressive decline than achieved by the Roman Empire, I think, in 200 years. The Fed in 100 years has done something, well, worse, I think. I mean, Nixon was the sort of the worst bit where they came off the gold standard. That was clearly where things started accelerating. I mean, up to there, it hadn't been too bad. It went from 5 to 4. This is against the Consumer Price Index. So, although it was pretty erratic with the Great Depression, etc., didn't actually lose too much overall, and actually maintained a sideways movement for about 30 years there. But since then, it's just collapsed. And this is the kind of thing that does destroy structures. It's a very destabilizing event, and I think that's where we're headed really at the moment, which is why I bothered to show you these charts. And I think it's something that requires some thought as to what might happen. My view is that the fiat currencies in the hand of government are just not really fit for purpose, which is why I believe that cryptocurrencies will fill part of that gap. I'm not saying fill the whole gap. It's going to be a lengthy process, but over time, I believe there will be a lot more crypto, a lot less fiat, but it's going to be quite a battle, and it's not going to happen very quickly. Right, I don't propose to go into very long-term Elliott counts here, but I remember when we saw this peak here, there was quite a big debate among Elliottians as to whether one more high was due. My view was that I'd watch the patterns to see how they developed. On the Dow, we got this triangle, then we went up to new highs. Fairly short-lived new highs, and we've come straight down again, but that might well, I think that pretty meets the criteria that we saw where these various people were debating whether there'd be a higher high or not. That could well be it. I'm certainly got a pretty impulsive decline from that high. So let's look at the shorter term action on the Dow. Well, we do have 5 waves down already. In fact, I mean, if you count this sort of falling wedge thing as a wave 1, then you got a 2 to there, a 3 down to there, and a 4 and a 5. That could be a complete 5. It's possible that this is actually the 4 coming in now, but that should become clearer. But even so, an A, B, and a C would seem to be on the cards at this point. So a corrective rally would appear to be due at this point. And even if it's not, then I think this is the fast section. Maybe I should say hope it's the fast section for the sake of the markets. And we're going to see, I would expect a corrective rally to come in. Also got the Xmas period, of course, but they could get blown away. I think there's some very powerful forces loose at the moment, and it could just blow away the normal kind of action that is seen. But hopefully an ABC rally, a clear sales signal would be good. And obviously we're monitoring that pretty carefully. But right now this looks like an impulsive decline. We could have seen 5 waves down already, although the wave 5 is a bit subnormal compared to the wave 1 here. So it could extend a little bit further. So see how it goes. But as I say, I think the fast action would appear to be behind us for this particular section. But if we see a 2 wave, then the 3rd wave would tend to be a lot faster. Right, a slightly more complex pattern on the DAX, which never came near seeing a new high. So I count that as a 1, 2, very messy 3, 1, 2, 1, 2, 1, 2. I'll have a look at the short-term action here. This is a daily. Well, I think we count this as a 1, 2, and 1, 2, 3, 4, 5. So this would actually count as a 4 on the DAX, but again, a bounce would seem to be due next week, which is early next week, with another leg down due. But again, looking impulsive. In the case of the DAX, it could be the end of something in the sense we have an ABC, and my long-term target 11,200 is now pretty close. On the Dow, of course, the beginning of something. So if we see 5 goes down as a starting point, then that suggests there's more to come. FTSE again a different pattern with a peak in the middle of the year, clear ABC decline, suggesting it's corrective, but it doesn't seem to be that anymore. I mean, there is this theory that ABCs are now 5s or count as 5s. So I mean, I guess that could be a 1 in that case, but it rather flies in the face of most of my Elliott's ideas. Anyway, 1, 2, 1, 2, 1, 2, 3, and no sign of a low there, but I think a bounce is probably due quite soon. Yeah, so it's all looking quite unpleasant at the moment, and as I say, I think the situation has been pushed as far as it can be, really. So I wouldn't be at all surprised if we are seeing the peaks or have seen the peaks, and from now on in it's going to be a case of corrective rallies and more falls, with perhaps some kind of brief interlude into Xmas when things tend to be calmer. But well, I wouldn't be too sure of that. All right, gold, no change of opinion here. We've got this rally we've discussed, 5 rows up, rather prolonged A, B, C. Now at 1, 2, 3, and the key resistance level is around 1,235, where this wave here would equal this wave here. So a good thrust through that level there would certainly set the. So the rally started here, not there. We thrust above there, then it would suggest we have seen a low in gold, which would be good. All right, finally, Bitcoin. We had this triangle which I discussed the other day in the subscribers report, and some amount of fuss has been made about this decline here. I think the Independent said it was a catastrophic fall or something, whereas to me it's just a blip down, testing support. I think Independent said billions wiped off Bitcoin, but I mean, really, in the context of what's happening in the stock markets, and in fact, in the context of Bitcoin itself, all we've done is retest the low of the triangle. We did blip slightly below it, but quickly found our way back in it again, although the rally has been very feeble. So, I mean, we're at that point where we're either going to see a very strong rally, or we're going to see another leg down. For people looking into this market at the moment, another leg down would clearly be better because you get better prices. I think there's a lot of strong support around 5,000, and people seem willing to sell everything to get into 2,500. But well, they actually would at the time. But I don't think we're going to go that low. I think we may well get below 5, get to around 5,000. But I think there's also a strong case we're actually going to go up from here, because we have got this 5 wave advance there. So it's possible that all we're seeing from here is a corrective triangle. Anyway, we're going to see. I mean, it is open to either move. We're clearly moving to a point in the triangle, and the market will do as it wants. Right, on that note, I'll call the day. If I found that useful, back to the report on Tuesday morning for subscribers. Have a great day, thanks for listening, and bye for now.